Hello traders everywhere, Adam Hewison here with your midday market report for Thursday the 22nd of August as we end the August month. And is it tears for Sears? What is it with these hedge fund managers who think they can manage brick and mortar retail stores? First you had Bill Ackman, who basically puked, and then you have Eddie Lampert, who's managing Sears into the ground. Hard to believe, but their egos must be ginormous. We're going to be looking at another stock today, HP, and also Sears. So let's go right to our charts. And the first chart I have up here is Sears, and I've already drawn a long-term trend line now. This trend line begins actually all the way back in 07. Now Eddie Lampert has had this market for the last 5 years, so somewhere around here he got it, and it's done nothing but go down. He's a very smart man, very good trader, but he doesn't know diddly about running a retail store. Also the world's changed, and I think that to be fair to Eddie, the world has changed, but you've got a couple of places where you really want to watch Sears very, very carefully, and one of them is right here, and that is on the lows, these lows right here, and I'm going to draw a trend line there just to show you, and we'll just grab it from here and go here. So that's kind of where we are. We've got support at this level, and that's right around, I'd say around the 30 level is support, and we're currently trading at 39.68. Now you can see our trade triangles are basically negative. All of our trade triangles are negative. They have been, and we continue to be negative on Sears simply because trend is your friend, and the trend is clearly down in Sears. So let's go on to our next market. Okay, the stock we're looking at is HP. HP has really done pretty well since the beginning of the year. You can see if we go back to these levels here, we're right around the 15 level, and we went up as high as 27, which is a pretty remarkable ride at about 70%. And that's largely due to Meg Whitman, who's been on the job about a couple of years now. She says it's a 5-year turnaround, but obviously today's action tells you it's not such an easy road to hoe. You can see our trade triangles kicked in right here. This is one of the great values of trade triangles. They kicked in right here on the 20th of August, 2 days ago, at 25.57. It was telling you that something is not quite right, and look what you avoided. We're currently trading at 22. That's a big 10% drop in a couple of days that you would have avoided with the trade triangles. That's really, really key, and that's one of the most powerful things I can tell you about the trade triangles. They get you in and get you out. And just trading with this market, just trading in HP, you can see how we've done very well for the year so far. Let's go take a look at those trading results on HP for the year so far. Let's take a look at the results of HP. We had 3 trades, 2 of which were profitable. That's a 66% win rate, and 1 that was not. We had an overall gain of $6.83. That's about a 33% return on capital over that time frame. I think that's pretty good given the fact that HP is down today. 500, and you can see we've been out of this market now for some time, and we continue to be on the sidelines with a minus 60. It means it's a trading range. That's all it means. Minus 60 is a trading range on our trade triangle. So let's scope this in for, let's say, the last 3 months. You get a better idea. So moving along to our next market, that's the NASDAQ, and it's pretty much flat. We're out of this market also, so we're just on the sidelines, also on the Dow. In fact, let's just go back to our portfolio. And here's the Dow. We somehow missed it, but the Dow is actually back into an area we think it should find support. We talked about this the last couple of days. So just putting the Fibonacci in, which is all you have to do is go to the Fibonacci indicator here, click once, it puts a little yellow box in the far left-hand corner, and just drag to the lows, and it puts the Fibonacci's right in here. So right around these levels, it's extended just a little bit beyond 61.8%. And I think this is the Fed coming in yesterday thinking they're going to end their tapering. I think they're addicted to it. It's going to stay in here until Bernanke basically gets replaced in January by either Janet Yellen or Larry Summers. We'll see what happens. But I'm hoping that we get a woman in there that has a little common sense, because the reality is this is going to be a really difficult thing for the Fed to get out of. So crude oil, we're into October now, so I want to look at October. And again, October is, we've talked about this before in terms of just the, let me just take this off for a second. Really just the square we're seeing here. It's really not much more than just resistance coming in here. It's kind of like a very broad trading range. The 65 score we have here is indicating a trading range, and I think we're going to stay in that. With sort of the lower end of the trading range, I expect to see this market bounce up from here. So let's just clear that off the screen and go to our next market, and that's going to be gold. Gold, if you remember, we sort of said was sort of not too enthusiastic about the upside here or the downside. It's plus 55, again a trading range. If you just click here, you'll get an idea of what we're talking about.
The plus 55 chart analysis score that you see in front of you recognizes that on the chart there are major discrepancies in trend between various time frames. This market may be moving into a trading range, and you may want to exit a position and move to the sidelines, or use an alternative technical analysis study if you wish to continue trading. But just remember, if you continue trading, you should be using proper money management techniques.
Okay, so that's our smart voice technology, chart talk technology. You can use it anytime. It's available on, I think, 350,000 symbols and updates constantly during the day. So the reason you see no data here, this is the volume data, and the reason there's no volume data is because this is a spot gold market. This is the gold market that's dealt with all the dealers around the world, and it's trading 24 hours a day, 6 days a week. So it's pretty much no volume. You can't tell the volume at all. You can only see volume on futures, of course. So moving on to our next market, and that's the Eurodollar. Same thing there. This is the interbank spot market, real time. We've talked about the Eurodollar again having the problems right around the 134 level. It's plus 85. The indications are we need to see our daily right here, the little red triangle turn green, then we can get really kind of positive on this market. So let's see how that plays out. But generally speaking, looks like the 134 level is really resistance for this market, but that can give way. Certainly the longer term trend and the intermediate term trend are positive, and only the daily is showing a little bit of resistance right now. So moving on to our next market, this is Amazon. We'll take a quick look at Amazon. Amazon looks like it's beginning to base out. If you remember, we like this stock. We think it's going to go much higher. We think this is like a juggernaut in the space, and this is just sort of rounding out nicely. If we put our Fibonacci numbers in here, we'll see how that looks. And again, click once on the Fibonacci signal, shows you a little yellow square here, and click and drag from the highs to the lows, which I think is about there, and you're right in that 61.8% Fibonacci zone. So watch this market very carefully. If we see it close over, I would say the 290 level, I would say get long, and then your risk is really the lows here around about the 285 level. So let's see how that plays out. Hey, I'm Adam Hewison from MarketClub. Thanks for stopping by today. Every success using our service, MarketClub, and of course in the market itself. I'll see you tomorrow.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.